Yep. Black Girl Stocks official merch is now live. So you can either scroll down and click underneath this video, or you can go over to teesprings.com. We have t-shirts, different colors, different sizes, crew necks, sweatshirts, and I got the MACD tee specifically for my fellas. What's up, fellas? Go ahead, get the socks, make an outfit out of it. Get rich, stay rich, everything positive. You already know how we do. So go ahead, check out Black Girl Stocks official merch.
Foxtail from the D.
Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, I'm gonna be talking about 5 of my top swing trading strategies that you can use to start making more profit or just trying something new. This is gonna give you an opportunity to really start utilizing indicators and just different ways to make more money. A few of you guys have been requesting more videos on strategies. So I just kind of wanted to put together a few of the strategies that I personally like to use. And yeah, so this is gonna be I say this every time. This is probably gonna be a fairly short video, but first, if this is your first time watching my videos, please make sure that you click that thumbs up button. It really helps the channel. Just brings more people, more good love, good energy and vibes to the channel. And also, if you're not already, please make sure that you click that subscribe button and also click that notification bell so that you get notified anytime I upload a new video for you guys. Right now, you see I'm wearing this MACD tee, so you guys are just basically getting a piece of my creative nature apart from stocks and videos and stuff like that. So this is the MACD tee. I had this one specifically made for my fellas, but of course it's unisex. Everybody can wear it. And then you can check out the back there. Ow, my knees. Please take a picture in your merch and send it to me. But when you do get your merch, I'm not gonna say if, when, hello, support your girl. When you get your merch, take a picture of it so I can post it and shout you out and just say thank you. So I'm gonna talk about 5 different strategies that you can use to swing trade. I know a lot of you guys like swing trading. I know I personally don't day trade. All I do is swing trade with options. So it's very close to home for me. We're gonna talk about 5 today. The first one that we're gonna talk about is Bollinger Bands Bounce strategy. Say that 5 times fast. So that's the first one that we're gonna be talking about. That one's pretty straightforward. Then we're gonna move over to Fibonacci Retracement, personal favorite. Next, we're gonna go to support and resistance using the EMA lines or the EMA crossover method. And then lastly, we're gonna be talking about using MACD. So those are the 5 that we're gonna be talking about. And of course, there's hundreds of different strategies that you can use, but these are just a few that you guys can go through and see if any of them are profitable for you. It just gives you a little bit of variety. And so that being said, let's go ahead and let's get into it. Okay, so right now we are in TD Ameritrade's Thinkorswim. Now, normally I do use Thinkorswim to read my stock chart. Now, since I have joined Webull, I use Webull a lot of the time. Shouts out to Webull. I know a lot of you guys have probably seen my Webull video. So yeah, that's me. If you were wondering, that is me. That's us. So shouts out to you guys. And yeah, but right now I'm going to be using Thinkorswim. One, because I like their platform. It just has a black background and it's just gonna look better with my t-shirt. And yeah, it's just easier. I haven't really gotten into using Webull's desktop platform. Right now, I'm really just using Webull on my cell phone. So yeah, we're just gonna stick with Thinkorswim right now. So in today's video, like I said, we're going to be talking about 5 different swing trading strategies. So first, I know you guys have probably seen my video on the basics of swing trading for beginners. And if you haven't, please make sure you check that video out. I'm going to have it somewhere either above me or in the link below. So make sure you check that video out. But swing trading is a type of stock trading style where you'll basically take profits in small trend changes in your stock price over time. So generally, you'll see a swing here. So I mean, this is kind of a perfect example. Well, this is a downtrend right now, but you see how right here we had a high. This stock is what is this? Microsoft. I wanted to say Misfit, but this is Microsoft that we're looking at right now. And you see we had this high here of 232, and then we kind of dropped here. Now our price, it hit a support point here and it started to go up, and then it starts to drop again. Swing up, drop again, swing up, drop again, up, drop again. So this is technically, you know, this is literally swing trading. So if you were a swing trader, you would more than likely want to buy here on that swing low where you see it at its lowest point, and then, you know, sell it when it's at its highest. But let me not get too far ahead of myself here. This is literally just the definition. But yeah, this is basically, in its essence, this is what swing trading is. And so you're basically capturing those upswings or downswings. And so two things that I want to talk about first that you're going to want to know to use with swing trading. The first one is you're going to want to know entry and exit points. And entry and exit points are basically points where you know where you're going to want to buy and you know where you're going to want to sell. So anytime you get into a trade, a part of your trading strategy is knowing when you're going to get in and out. You don't want to just get in and stay in unless you're a long-term trader. But if you're looking at volatile stocks and you're planning on making money off these short trend changes, then you're going to want to know, first of all, when you're going to get in, what to look for, and when to get out, when to take your profits and leave it alone. That's something that I needed to learn a lot along the way, is when to actually cap your profits and jump out, because, you know, the stock is probably, it may possibly fall again and you don't want to lose those profits. You want to keep and maintain those. First, the entry and exit points, and then also the stop loss amount. And so basically a stop loss is saying on any particular trade, if I'm losing more than a certain amount of money, like if the stock drops below this, I'm out of there. I got to get out. So that's really going to help you with your swing trading, because one, when you know your entry and exit points, so you have to have your stop loss with swing trading, because, you know, you have this stock, it's swinging, so it may continue swinging up in your favor or it might go down. So that's why definitely with swing trading, you want to utilize stop losses and, you know your entry and exit. Of course, like I said, there's a lot more that could possibly be discussed, but I just want to keep it brief, keep it simple on this stock. So this is in a 4-hour 180-day chart, give you a good idea of what's going on with it. It's in an overall uptrend. Think trend. I always say in every video, we always want to know what trend we're currently in. So over this time frame, I know, and you can see that we're in an uptrend. So the first strategy that I want to talk about is the Bollinger Band bounce strategy. And so let me go ahead and let me put this on and so the reason why I believe we talked about this in our previous videos with Thinkorswim, but basically all in all about the Bollinger Bands, this indicator, let me just add it. I'm just gonna add it here, apply. Okay, so this is our Bollinger Band setup, and let's first just talk about what this is. So this is going to be used to measure the market's volatility, and it's going to tell you when the stock is overbought or oversold. So in that sense, it's a little bit similar to RSI to me. This is basically going to tell you when the stock market is quiet or when it's loud. And so when it's quiet, then that's when the bands are going to contract, and when it's loud, then they're going to expand. Great example of that on this stock. But look, you see right here how the bands start to get a little bit closer. So this is when it's a little bit quieter, and there's not a lot happening here. That's why it's not a lot of price movement. But when you see here the bands are a little bit further apart, then you have more volatility there. So that's just one way that you can use it. Okay, and so when the price is moving up, when it's uptrending, then you're gonna start seeing those bands start to separate, and that just means that it has higher volatility at that time. And so when there's not a lot of price movement, then that means that the bands are going to be narrow. And when you really want to get into the stock is when you have more price movement. That's with the strategy that we're going to be using. Okay, and so this strategy that I'm going to be talking about is the Bollinger Band bounce. And so it's fairly simple. Okay, and so the first rule is you're going to find the trend that you're in. So with everything that we always talk about, we're going to want to know what trend that we're in. And the reason why you want to know the trend, it needs to be an uptrend, not a sideways. It needs to be either an uptrend or it needs to be a downtrend. It definitely has to be an in a trend. And so you see here, you know, we have, you know, there's a high here. We have a high here, a low, high, low. It's doing okay. So we find a trend, it's in an uptrend. The second rule is the price is gonna have to have a fall back. So let's say right here, you see we're in an uptrend. Okay, the price needs to fall. And when it falls, it needs to almost touch that bottom band. So let's just find a point. Okay, so you see right here, when is this? Well, this is back in June, but this is just an example of how to use the chart. You can actually use it right now, but yeah, you see right here how it dropped and it pretty much touched this band here, the bottom band. So once you see this price is at the lower band, then you're gonna drop down and you're gonna look at the RSI indicator. And so when this price is touching the bottom band, when you're looking at the RSI indicator, the rule of thumb is it needs to be between 30 and 50. And the reason why is because you wanna catch it when it's going to be on an uptrend again. So I'm just gonna give you an example right here. You see right here around December 9th, we had a drop here and it kind of touched this lower band. Now around here, the RSI jumped to about 49. So it's in between about 30 and 50. Then, you know, the thing is with this, the price is usually always gonna come back up to this middle line here. And so you see how the price dropped, touched right here, touched that bottom band. Because these two bands, this is an average over time. So your stock is generally going to be trading in between these lines. So you don't really have to, you don't really have to worry about your stock falling down below that. So you see it where it's right there. Check that RSI. I see right there the RSI is right at about 50. After you see this price touch the bottom band and you see your RSI between 30 and 50, that is when you're gonna enter. And you see that if you did that and you entered right here, you had this huge gain in price. So this went from 210 to 200. Okay, that's not huge, it's about $10, but still, I mean, that's a good improvement. But the rule with this is you have to make sure that RSI, you use this with the RSI, make sure the RSI is between 30 and 50. And you do that because that's going to be a signal of that trend increasing upwards. So if you have an RSI that's a little bit lower, you see like right here where we are in real time, when it touched the band, the RSI was about 37. So yeah, this would have been another good time to get in. And you see that the price jumped from 211 to 216. So that's just one way that you can use this indicator. So this is the Bollinger bands, and you can also get this in Webull too. So this is in ThinkorSwim, you can use it in Webull. And so the next one is going to be the Fibonacci Retracement. It's basically just going to be, you know, it's going to be horizontal lines that are going to give you possible support and resistance points in your stock. So once again, the first thing that you're gonna want to know about this strategy is that it's gonna work best in a trend. So, you know, with a lot of things I talk about, trends are very important. This really works best in a trend. And so the rule of thumb, let's just go ahead. I'm gonna show you how to do it here. So this is in ThinkorSwim, and basically you're gonna start at your, so if you're in an uptrend, you're gonna start at your low and you're gonna go to your high at that trend. So find your lowest point. This is my lowest point here at around 209, add drawing, and this is percent sign. This is the Fibonacci Retracement, and you're just gonna drag it up here to your highest point. Okay, and it's just gonna give you, didn't do it. Okay, and it's just gonna give you these horizontal lines, and it basically gives you points, not guaranteed, but possible points of support and resistance. So the rule of thumb here, when you're in an uptrend, you're going to buy when your stock price hits a support point, and you're gonna sell when it hits a resistance point. You know, so when that swing up hits a line, that's gonna be a support. When that when that cap hits a line, then that's gonna possibly be a point of resistance. So that's one way that you can use this, and just even through going through this fairly, you know, recent stock here, you see how the stock did go up, and it periodically did kind of touch and stop at these Fibonacci lines. So I think that that's actually pretty amazing. So I mean, once you get comfortable using this, you know, it basically picks out support and resistance points for you. But of course, you know, you're gonna pick out your own, but this is just something to help you along the way. And so this is how you would do it in an uptrend. So you're gonna find your lowest point and start there, and then you're gonna drag it to your highest point. So I wanted to use so yeah, that's one way that you can use this. So yeah, when you're in your uptrend, you're gonna wanna start at your lowest point, drag it up to your highest point in that frame, and then just use these support and resistance lines to kind of gauge through your trades. So if you see, yeah, you see here, kind of bounced off of that and it dropped, boom, drop, boom, drop, boom. This isn't a sure thing. Like I said, these are just, you know, this is just statistics, and this is all to kind of gauge where you want to go. Now there's a lot of technicalities that go into these percentages. Like you have your 0% here, your, what is this, 23.6, 38.2, 50%, 61.8, all of those. Yeah, there's a lot that goes into that, but I really, right now, I just want to talk about how to use the tool. And another thing to think about is a lot of other people are going to be using this tool also. So the more people that actually use this, then that's why you want to go with a more volatile stock. So yeah, I mean, that's pretty much the basics for that. I know there's a lot more that you can go into with that, but I really just wanted to show you guys about the Fibonacci retracement. I know we went into it in another video, but I will be having a solely Fibonacci video and just kind of get into more of it and how you can use it. Okay, so we talked about the Bollinger Bands, we talked about Fibonacci retracement. The next one that we're going to be talking about is support and resistance. Now, we've talked about this quite a bit on the channel. Okay, and you know, a lot of what we just looked at, even with the Fibonacci retracement, has to do with support and resistance. Okay, so let's see. Okay, I kind of see a couple of places where we can do some support and resistance just here on this line. And so we've talked about support and resistance before, but just briefly, a support line is basically going to be a price level or an area on your chart below where the current price is, or the current market price is, where the buying is going to be strong enough to overcome that selling pressure. So yeah, you see here how you have, look here, this stock went all the way up to $228, and then it dropped to about $209. So it looks here, I can just put a little line here. So it hit this line, and then we can actually just kind of follow that. When was this? This was on November 10th till about a month later. And you see that it dropped there and it hit this support point. So like I said, there's enough buying power that even though it got sold off, the buying power is going to overcome that, and it's going to go back up, but maybe not too far up, and then it's actually going to come back down. Then once again, hit the support level, went up, and you know, it's not breaking through a price lower than around 209 right now in this time frame. And so resistance is basically the opposite of the support. So you see here, we can actually kind of somewhat, yeah, I mean, this one isn't the best, but, and so yeah, I mean, this kind of gives me a lot of, you know, it's very similar to the Bollinger Bands, but it's just, this is kind of you doing it yourself. That was more automated, but just here, similar to the support, it's not breaking through this point of resistance. So the price is jumping here from 209 to about 218, and it's not passing through that until it really breaks through when it hits this 220, and then it continues upwards. So one thing that you can do in situations like this, if you see that you're in a setup similar to where we are here in the perfect world, you can enter. All right, so you can do one of two things. You can wait for it to drop all the way down here to the support, and then you can buy in there and wait for it to become, you know, very, very overbought, and then you can sell it once the price hits higher. Another thing that you can do is, if you wanted to play the opposite of the field and make money when the stock is dropping, you can wait until the stock hits this resistance point, and you can actually just outright do a naked sell. Just like when you outright just buy it, you can actually just outright sell it. And that is using marginal shares. You can just sell it right here when it's at the top. So we talked about that, and then the next strategy that I'm going to be talking about is how to use your EMA lines and your okay, and we're going to do the 10 and 20 day EMA strategy. So here's what we're going to do. We're going to go here, and we're going to add, okay, and on one of them, you're going to go in here on the settings. One of them, you're going to change it to the short time of 10. I mean, that can stay blue. And then the other one, we're going to change to 20. This is going to be the longer time frame. So I have one on the 10 and I have one on 20. And so the reason why you're going to want to do that is you have the 10 time frame and you have a 20. So you're gonna have a short term and a long term. And when you have that short term crossing over your long term, then that's gonna be a sign of an uptrend, and vice versa. When you have that long term crossing above the short term line, then that's going to indicate it dropping. So yeah, like you see here, and it helps you here in Thinkorswim. Our blue is our short term, and the, what is this, yellowish gold is the long term. So you see here, every time when the stock is dropping, you see the yellow or the long-term line is above the blue. And when the blue is above the yellow, when the short term is above the long term, we're in an uptrend. So the strategy was this: when the shorter 10 time frame line crosses above, like you see right here, you see how that blue crossed above that yellow? This is gonna be a buy signal. And this is when the stock rose from 205 to about 218. So you could have gotten some cute profit there. Or even right here, you see how, the long term was just when it was dropping, boom. And then you see right here, when was this? On November 3rd, you see that blue start to cross above. It's just a huge uptrend from about 204. Oh yeah, that was the same one. It's about 220. So that's one way that you can use that, using two different EMA lines on your chart, but one of them is gonna have a shorter time frame, maybe about 10, and then you're gonna have another one at 20, further away. And when that shorter line is above the long line, the long-term line, the further out line, that means you're in an uptrend. And make sure they're different colors so that you can tell. And so those are just gonna give you your entry and exit points for swing trades. And so when you're looking on your time chart and the time period that you pick, just looking at your different time charts is gonna help you to gauge when to enter and exit your trades. And then also, of course, you can look down here and use your RSI, and just to give you that little extra push. So we're about to get into our last one. The last strategy that we're gonna talk about very briefly for swing trading is going to be using your MACD crossover. So I recently fell in love with the MACD crossover, and honestly, it's pretty much the same thing as the EMA. And so I talked about this on live. I think the last 2 lives we talked about this, but essentially it's the same. It is literally the same. I picked the great colors too, or maybe they picked it, I don't know. But yeah, so it's the same concept. So with MACD, you're gonna have 2 lines here. This blue line, this is gonna be your MACD line, and then the yellow line is your signal. And then you're gonna have this histogram, and the histogram is gonna show you how wide those 2 lines are from each other. So the wider the lines are from each other, the more strong the trend is going to be. So you see right here how the price isn't really moving much. You see these little bitty trends, small lines. There's not a big gap in between, but you see here this big gap here, boom, big gap up there, big moves, big profits. Let's see if we can find another one. It's not too much, but yeah, so what you're gonna do with the MACD is when you have the MACD, the light blue MACD line over the signal line is this yellow. So anytime that your blue MACD line is over your signal line, then that's gonna let you know that this is a good buying opportunity. And then you can also use this histogram to gauge how far apart they are or how strong that move is going to be. And then of course, you're always gonna, with everything, come down here and use your other indicators. Also use your EMA crossovers, and then use your RSI. But once you see the blue MACD line cross over that yellow signal line, then that's gonna let you know that you are going into uptrend territory. And so then if also, this goes on the flip, if you were wanting to profit off of the stock dropping, then you would just do the opposite. You would want to see that yellow line above, or you would want to see that yellow signal line above the MACD line, or vice versa. You'd want to see the long-term EMA line over the short-term. So, it's really just different little strategies, different ways that you can use indicators. I know I could have gone a lot more in depth with this, but I really just wanted to give you guys a few different strategies, a little bit of variety. Also, right now when I'm finished, while I'm filming this video, I just kind of want to show you guys really briefly, because I have a Zoom meeting in like 20 minutes. I want to show you guys, I told you this is in Thinkorswim. You can do all of this on Webull. So I'm just going to get in Webull. I'm going to use Blink. And so on here, I'm just going to click on indicators, and right here, you see the Bollinger bands. You can do that there. So that's the Bollinger Bands in Webull. Let's see, another one. Okay, I already have my EMA line on here. Yeah, it has the EMA and it has the MACD. So this is your EMA line. And so this one actually has 3 different ones. So it has, let me see. Okay, you can edit your lines here. Okay, so I have 3 different EMA lines. I have a 5-day, a 10-day, and a 20-day. So that's even better. So yeah, I'll just keep it as it is. But yeah, just off rip, Webull's gonna give you 3 different EMA lines. So that's even better. But yeah, you just want to, yeah, so just know which one is which. The blue is the shortest one and the purple one is the furthest out. So you see this blue is on top, so this is good. This is good, 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 right there. So where are we at? Yeah, blue up top, good, good, good. Lastly, you can do your Fibonacci. How do you do it? So that one you're gonna click draw. It doesn't show it to you right here, but oh, there you can draw your trend lines too. Just click on more and it's gonna show you your Fibonacci retracement. So you just do it there. Oh, okay, and then it brings it in. Yeah, so, and then you see here how the price kind of boom, it hit up there, bam, 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 boom. Yeah, so, I mean, it's not an exact science, but it's a little bit easier. Honestly, for me, I'll probably continue using it on my desktop, but I mean, if you are on the go, you can use it on your cell phone, and then you can do your own support and resistance in here too. We've done that before, but yeah, that's basically it. So if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. Also, if you're not already, make sure you subscribe, click that notification bell so you get notified anytime I upload a new video for you guys. We go live every Sunday discussing upcoming stocks that we find value in, so you can give me your suggestions and requests and we'll talk about them. And then I have a few that I talk about also that I picked using Thinkorswim's stock scanner. With that being said, I'll see you guys in the next video. I appreciate you guys so much. Thank you for watching. All right, that's Black Girl Stocks. Peace.